Well, let's dig into this because now to discuss the jobs report, the implications for the Fed, the distinction between those ADP numbers, and today, Cleveland Fed President, former Cleveland Fed President Loretta Mester, she is now an adjunct professor at the finance at University of Pennsylvania's Wharton School, a CNBC contributor as well. Good morning. I'm so curious, as you saw this number across the tape, what was your first reaction?
Well, we expected it to be affected by the hurricanes, and I think that's what we're seeing in that report. We knew it was going to be a mixed read, and there was going to be a lot of noise in it. I was glad to see that the unemployment rate stayed at 4.1, so that gives you some indication that things are not, as weak as that payroll number suggests it was, and that it was affected by some of those hurricane effects. I think Steve before talked about the number of people out of work because of weather was quite high, so I think that's a noisy reading, and I think what the Fed will do is they'll take that into account when they look at all the other indicators that came in since the September meeting.
So when you think about what the Fed's going to do next week, they will do what?
Yeah, to my mind, it's not that hard. I mean, it seems pretty straightforward to cut another 25 basis points. I mean, if you look at all the data that came in since last meeting, it really hasn't changed the baseline narrative, which is, look, inflation has come down quite a bit from its peak. There's more confidence it's going to continue to move down, but we know it's going to move down gradually. We're not at 2%, and if you look at the S&P from September, it takes a couple of years to get all the way back to 2%, but more confidence it is on that downward track. And the employment part of the mandate, we know it's moderating, but still the readings are healthy. So what you want to be doing is that the economy normalizes. You want to be making sure that you're normalizing policy so that it stays really well calibrated to that economy. And importantly, you want to make sure that you're always positioning policy so that no matter how the risks manifest themselves, you're able to respond. And I think that's kind of what the narrative was at the last meeting. They did 50 because they were concerned about, I think, the labor market weakness that they saw in some of those readings in the summer. Now, of course, some of that was revised away, but there hasn't really been a big change in sort of what the baseline view of the economy is. Now, that could change as we get more data going into the winter and early in January, and that's going to be the task of the policymakers to just really analyze.
What do you make of the argument, and we heard this from people like Mark Rowan, who runs Apollo Group. He came out publicly and said there shouldn't be any rate cuts. The economy's doing fine or more than fine.
So that's a short-run focus. I think what the Fed has to be doing is looking at, how's the economy going to fare in 6 months from now, 9 months, 12 months, because that's when the policy that the Fed sets actually has its impact. So I think my view would be that I look at all the data coming in. It really hasn't changed where I think the economy is headed. And so that means that we should be continuing to normalize a bit, but we may, want to be careful about that because there are, risks on both sides. And so I think the downside risks are less than they were in September, but my basic view of the economy hasn't changed that much that I would say pause. Also, I mean, you remember Rosanna Dana? It's like, never mind. Yep. They changed kind of what their view was the last time, right? They came out and said, look, we are more confident inflation is going to get back to 2% in a sustainable way. We see the employment moderating. We want to recalibrate policy to be for that economy. It would be kind of hard to get into my mind, at least, sort of like, okay, you said that in September. Now your whole view of the world has changed based on the data that's come in. Now, sometimes the world can change very quickly, but not based on what we've seen.